Welcome to First Mover, your first look at the day's global news headlines. Joining me is my co-host, Coindesk Managing Editor of Global Capital Markets, Lawrence Lewitton. Hello there, Lawrence.
Good morning.
All right, let's have a live look at Bitcoin right now. The Coindesk Bitcoin price XBX index currently at $39,056. Bitcoin is slightly up about 0.4% over the past 24 hours. The Coindesk Ether price ETX index is at 2620. ETH is sliding back just over 0.7%. And the DFX Coindesk DeFi index right now at it's not showing up. There it is, 229. There we go. All right, also tracking losses about 0.3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, it is day 12 of the Russian invasion in Ukraine. Zelensky, president of Ukraine, is warning of a renewed wave of attacks from Russia. And Russia also says that they want to have a third attempt at creating humanitarian corridors in Ukraine after reports that its military had violated previous ceasefires. And taking a look at the markets right now, what do you see?
Well, we're seeing oil is skyrocketing. We're at 2008 levels. This is kind of like what it was for those of you old enough to remember the late aughts. There was, of course, this massive rally in oil, and let's not forget that a couple of years ago, oil was literally trading below zero. It's now over 120. At some point.
Did you see that Elon tweet, Lawrence? He was saying that, hate to say it, but we need to increase oil and gas output immediately. Extraordinary times demand extraordinary measures.
Yeah, that's not going to necessarily help the way, say, a ceasefire or withdrawal of Russian troops would. By the time you get any new oil online, et cetera, that'll take weeks, months, years. It's nice idea, potentially. Interesting it came from Elon Musk, but it's not enough. I mean, look, this is an immediate issue that can be immediately solved. And we're seeing right now what's happening in Russia in terms of the ruble. Remember, Russia's a big oil and natural gas exporter. The ruble is collapsing. It's at it's at about 0.7 cents per dollar. So
yep.
I mean, this is a more immediate thing that needs to happen, which is ceasefire. If you want to see oil prices go back to where they were before.
Yeah. Meanwhile, Ukraine is continuing to implore American companies, private businesses to cut services to Russia. Vice Prime Minister Mikhail has been writing letters to Amazon, Google, as well as Apple, Microsoft, and many more to end their services in Russia and for Russian users. Joining us now to discuss is Coindesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of Coindesk's The State of Crypto newsletter. Good morning, Nick. So yeah, over the weekend we learned that Visa and Mastercard are joining PayPal in suspending Russian operations, citing Russia's invasion of Ukraine. What do we know so far?
Good morning. Yeah, so Visa, MasterCard, and actually late yesterday, American Express also announced that they would all be suspending their operations in Russia. Basically, they would stop processing any transactions by Russian-issued credit cards, as well as not allowing any of their cards to be used in Russian ATMs or merchants. And this is kind of a big deal, but it is a little bit bigger than, it sounds a little bit bigger than it actually is. What it means is that domestic transactions in Russia will continue to be processed. Those are being processed by the Russian national payment system, and so there's not really going to be any disruption there. However, if you have a credit card or debit card issued by a Russian bank, you're trying to use it outside of Russia, you will not be able to do so. And likewise, if you're trying to use a card issued elsewhere within Russia, it might be difficult, or that again might not be processed. So this is going to certainly lead to pretty heavy amounts of disruption for people who are trying to spend their money, either in Russia if they don't originate from there, or outside Russia if you do live there. Especially if you're one of the individuals who is now fleeing Russia because of their recent crackdown on dissidents.
So how effective do you think these actions will be?
I mean, it's going to be another layer in the whole, kind of global sanctions / boycott that we're starting to see. A number of companies have announced that they're going to suspend operations in Russia, and these are, services companies and things that people want or pay for. So things like Netflix, and if the idea is to pressure the Russian president to withdraw from Ukraine, certainly it's going to, the question of how effective they'll be is very much unanswered. But in terms of, if the question is, can you pressure Russian citizens to say, hey, something's going on here, what's up with this? Then that's probably, we're probably going to see that pretty shortly, because a lot of these services are ones that people pay for. And, I think, Apple Pay and Google Pay are already suspended. A lot of these are payments firms or financial firms that people are used to using in their everyday lives.
Yeah, Nick, I mean, we see these oligarchs and their kids out on Instagram showing what they're spending, et cetera. They're still able to use those black Amex cards in London as much as they'd like, correct? I mean, this isn't necessarily affecting those guys.
Right. I mean, it's just started. It's going to depend a lot on where these cards were issued. So, were they issued by a actual Russian bank? Were they issued in London itself? So that's going to be a huge part of it, right? It's not that these credit card processors are saying, we're going to arbitrarily cut off everyone who happens to have a Russian name. I'm not even sure they could do that, to be honest. But
No.
They're saying that if, your card was issued by one of these entities that is, contained within this geographic region, they're going to stop working. At least, if you try using them in, this other geographic region.
Right. And then there's another question of whether or not some companies are too big to sanction. Wall Street Journal had an article about Norilsk Nickel, which is a mining company that's responsible for about 5% of the world's annual production of nickel, which is a key component of electric vehicle batteries, and also 40% of the world's palladium, which goes palladium, which goes into semiconductors. So interesting to see what companies will be cutting off services and the effects that will actually have. Nick, will end it there, but thank you for joining us. That was Coindesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on Coindesk.com.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Meanwhile, last Thursday, MetaMask, the gateway for many to the world of Ethereum, was made inaccessible to users in Venezuela, stoking the ire of the crypto community. Apparently, Infura, the infrastructure service also owned by Ethereum conglomerate ConsenSys, had imposed new geoblocks to comply with U.S. sanctions, but applied them a little too liberally. Joining us now to discuss is Arthur Falls, who was a former employee at ConsenSys. Thanks for joining us, Arthur. Just off the bat, how do you think this problem happened?
Well, MetaMask and Infura are both owned by ConsenSys Software Incorporated, which is a US entity. So it's subject to any of the rules and stipulations that the US government wishes to apply. This wasn't the case very long ago. In fact, I represent a group of shareholders that believe MetaMask and Infura were illegally transferred out of the neutral Swiss entity, ConsenSys AG, into ConsenSys Software Incorporated in 2020. And at this time, JP Morgan and UBS, Mastercard, a bunch of very large traditional financial players took stake in those products. So this is exactly what we would expect, given the way that the ownership of these products has evolved over time.
Interesting. I'll just read out this statement from ConsenSys. They were saying this error was promptly corrected, resulting in the access controls being configured to restrict only those regions which Infura and all other US-based blockchain service providers are required by law not to service. You mentioned that lawsuit. So a group of shareholders for Ethereum, the development company ConsenSys, are claiming that they were basically jilted on a deal between two ConsenSys entities that transferred control over the popular wallet MetaMask and infrastructure provider Infura. They're requesting that a Swiss court review the transaction. So explain, Arthur, why you're bringing forward this case.
Well, In August of 2020, a deal was made by which Joe Lubin, who was the majority shareholder of ConsenSys AG, transferred the most valuable business units of ConsenSys AG. This is the Swiss entity, the original ConsenSys, into a new company called ConsenSys Software Incorporated in exchange for 10% of the new company and a write-down or a forgiveness of a $39 million loan. No reason was given for this transaction, no satisfactory reason, no important shareholder meetings that had to took place. Joe Lubin is the majority shareholder of both companies. He and one other guy are the directors of both companies. So, you've got a serious conflict of interest on the part of half of the board because there's only two directors. So Joe Lubin should have recused himself from this. You've also got dual representation, which requires additional special scrutiny, both in Switzerland and in the US. And then also a year later, they raised money at a $3 billion valuation. So these assets apparently over the course of 12 months went from being worth $50 million or thereabouts to $3.3 billion. I mean, this is the worst business decision you could ever make. But of course, Joe Lubin controls both companies and is predominant shareholder of both companies. It's not a bad business decision. It's just an effort to rip off the shareholders.
Right. You're representing the shareholders of the Swiss company, correct? And so your argument is that, among other things, that Lubin essentially transferred all the valuable stuff into another company he owned, left you guys with some straw, and he gets to write down some of the debt. The debt was his own debt, correct? It was. How did that work? Can you explain what his debt exactly is and who got the benefit of the write-off?
Well, so theoretically, according to Joe Lubin, he funded ConsenSys AG with loans denominated in Ether. So ConsenSys AG owed him millions of dollars in Ether, billions and billions of dollars, presumably. It's almost like you can make up a number. And of course, no one would ever agree to taking a loan in Ether, right? Like if you're going to have to pay this back in Ether, that's it's going to be a tall order, especially if you're part of an infrastructure company that is trying to increase the value of Ether. So Joe Lubin funded ConsenSys AG through loans denominated in Ether, and this is why there was money there for him to forgive. Part of the reason he's given. Carry on, sorry.
I just want to show a response from ConsenSys Mesh. They said that the business fundamentals and operating environment are entirely different today than at the time of the transaction, though the group would like to apply a valuation that might be achieved today to a set of projects that were pre-monetization during the darkest days of COVID when the transaction took place. So they're basically responding to your class action and saying that, this is just the way the timing worked out in terms of the valuation of MetaMask and Infura. And I wonder what your response is to that.
Two very clear responses here. First of all, MetaMask was valued at $4.4 million. And in that valuation by PwC, that they explicitly state within the valuation they do not stand behind. They indicated an expected revenue of $100,000 for the year 2021, whereas the real revenue was $100 million. So, how out of touch do you have to be with your own company to underestimate revenue by 1,000 times? The reason this happened is because they launched MetaMask swaps 2 months after the transaction. Now, that is what drove that revenue. It's a service akin to Uniswap. Now, MetaMask has been around for 5 years. So it's been pre-revenue for 5 years. Then suddenly it gets transferred out of ConsenSys AG, and magically 2 months after that, they go post-revenue and produce, into the following financial year, produce $100 million. It's a laughable suggestion. And with regards to the changing business environment, well, would be a really good indicator of why that was the wrong time to conduct such a transaction.
So what do you plan to get out of all of this? What kind of settlement are you hoping for from ConsenSys? What would you like to see happen?
Well, the shareholders of ConsenSys AG have missed out on their fair share of that $3.3 billion. Recently, there's rumors that ConsenSys is raising, ConsenSys Software Incorporated is again raising at a $7 billion valuation. Now, if that transaction was illegal, then unfortunately all of those parties have invested in a company that does not own the intellectual property that it claims to. What we want to see, someone's been ripped off here. Either it's the people who have invested in ConsenSys Software Incorporated, or it's the original shareholders. And Joe Lubin needs to make these people whole.
You know, in the Cryptopians, a new book out on Ethereum by Laura Shin, she mentions that, ConsenSys was described as a somewhat chaotic workplace where there was a lot of money and resources being essentially wasted with little organization. And you mentioned he was loaning Ethereum, so I guess that's why there was a lot of money around. But what was your experience, and what ultimately led you to leave the company?
I mean, it was really amazing. There were some incredible people doing incredible work, but as you say, it was, as you point out, it was extremely shambolic. Joe Lubin ruled despotically in spite of claiming that this was a decentralized organization. There was no, it was just the kingdom of Joe. And and even though it was fun, it really felt like you couldn't get the work done that you wanted to get done. And you'd see others just not doing work that it felt like your efforts were being diluted away. It became an unhealthy place to work, clearly wasteful. It was very weird. But, I mean, great stuff got built, and that is what made it so hard, is you had these great products, great teams like MetaMask and Fura, etc. Some of these guys, like, Andreas Young and all these people, were so cool and so talented and absolutely built the Ethereum ecosystem, and yet they're having to work alongside people who are just not really in it.
Mm-hmm. I just have one last question. I know that they mentioned that the shareholders involved in this class action represents less than 50% of the total shareholders and an estimated 12% of the shares outstanding, but this is something you dispute as well.
Yeah, I mean, so everyone's the reason I'm standing here, or sitting here in front of you today, is that no one else wants to put their face on this publicly because they fear retribution from Joe. They used to call Joe Lex Lubin. He's this kind of shadowy, scary kind of villain type. So it's hard. I can't come out and give you a list of shareholders. But yeah, I mean, we were when we filed for the audit, we were at over 14%. Now I believe we're over 16%, and that's a majority of shareholders themselves. Apart from Joe Lubin, there's only 28% of outstanding shares. So we're over 50% of the outstanding shareholdership that is not Joe Lubin himself, at the very least.
Interesting. Well, we'll certainly continue to monitor this case. Arthur, thank you very much for coming on and explaining your side of the story. That's Arthur Falls, a ConsenSys shareholder and former employee. Coming up, crypto markets update with quantitative asset manager IDX Digital Assets.
Hey there, it's Zach Seward, co-host of The Hash and Deputy Global News Editor at Coindesk. You're watching Coindesk TV.
Checking in on Bitcoin, the Coindesk Bitcoin price XVX index currently at $39,129. Bitcoin slightly up about 0.8%. The Coindesk Ether price ETX index is at right now 26.35. ETH is also now in the green, up about 0.2%. And the DFX Coindesk DeFi Index is also making a gain of about 0.5%, currently at 231. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
And joining us now to discuss the crypto markets is Ben McMillan. He's Chief Investment Officer at Quantitative Asset Manager, IDX Digital Assets. Welcome, Ben.
Good morning.
Good morning. So it looks like in many ways we're seeing we're seeing Bitcoin and ETH down since the start of the war. But relative to alts, we're seeing it down not as much. Is this a flight to safety within the crypto complex, and at the same time just a walk away from crypto in general because of the risky asset, the risky nature of the asset? In other words, we're seeing kind of a risk-off mentality in crypto.
Yeah, I mean, I think that's exactly what we're seeing is the migration out of more speculative kind of altcoins into the blue chip holdings, Bitcoin and Ethereum. And again, even if you're looking at the trajectory of Bitcoin, I think last time I was on the show, actually, it was towards the end of last year, our models were actively raising cash. So the weakness, was there before, and it was really the Fed pivot that kind of catalyzed the sell-off in Bitcoin and traditional risk markets in general. You look across equity markets, broadly. What was interesting was the crypto markets priced in a lot of bad news really quickly. And so the war in Ukraine certainly didn't help. But we are at a period now kind of below 40,000 where historically we've started to see the buyers come out of the woodwork. So the structural bull case is intact. And I think part of that is, as you said, there's a migration or a consolidation within the crypto sphere around kind of the core holdings, Bitcoin and Ethereum.
Nonetheless, I mean, there might be some, all things being equal, if this had been a different environment, a price below 40 would have seen that kind of consolidation, as you were saying. But we are kind of in a very weird time right now. We're seeing oil skyrocket. We're seeing gold go above $2,000. So does that necessarily mean that will that translate to ultimately a higher price in Bitcoin if we just haven't seen that kind of a reason why that would happen for the time being?
No, I mean, that's the $1 million question. And you hit the nail on the head, too. I mean, a lot of people had kind of touted Bitcoin early on as the digital version of gold, and it was the inflation hedge. And, we didn't see the flight to safety bid in Bitcoin that we did in gold, particularly at the start of the war. Now, interestingly, we did see the flight to capital safety bid as, Russians started, actively trying to migrate out of rubles into Bitcoin. But, to your point, times are different now. And, oil is a tax on everything. Oil at this level, which we haven't seen since more than 10 years ago, 2008 era, is, just a drag on economies globally. So I think the big question really is, how bad does this war get? How long does it persist? And then ultimately, what, if anything, does that do to impact the Fed's behavior going forward? Because let's not forget, that was the catalyst for this entire sell-off was, the Fed's plans for not only rate hikes, but asset balance sheet tapering. So, what does that look like when we come out of this Ukraine crisis?
The thing though with the Fed and how it was behaving in terms of tapering, in terms of lowering its balance sheet, that was kind of broadcast for a long time. We knew it was coming. So the price in Bitcoin, in many ways, if you believe in efficient markets, and perhaps digital markets aren't efficient yet, but if you believe in digital markets, you would say, look, that was priced in. That didn't matter necessarily to what's going on in Bitcoin. The other question or the other aspect of this is this war in Ukraine also may have highlighted the fact that it is hard to buy Bitcoin to get your money out of a country like Russia, for instance, if you're sanctioned, if you're a sanctioned individual, if you're an oligarch who has billions of dollars that you want to quickly transfer into Bitcoin and then sell it. We haven't seen those kind of flows out of Russia. Gold, on the other hand, much fungible. You can shave off the serial numbers on your gold bars and sell it quite quickly. Has it sort of made that case? And has this war made the case that Bitcoin is not that safe of an asset after all?
So, I mean, you raised two really interesting points. And again, it's the contrast of Bitcoin versus gold. Bitcoin has the appeal in that it's entirely digital. Theoretically, it should be easier to, move assets or move that store of value, anywhere in the globe. But what we saw was, kind of a rush for global regulators and authorities everywhere to crack down on specific wallets. And they were really leaning on the exchanges to blacklist certain wallets within Russia, within these oligarchs, which did make it difficult to use Bitcoin, to get out of the country or subvert capital controls. One of the things too that we've seen is that blockchains are very transparent. It's a lot easier to trace blockchain holdings than in some cases, as you say, gold. So I think that narrative has been tested a little bit. I also think, though, it does highlight kind of the permissionless and trustless aspect of digital currencies, which is still unique, which is very much intact. And, you look at like the Ukraine raising $50 million in crypto very quickly. I mean, that was extremely efficient. That was done in a perfectly trustless environment. I think that was a very excellent proof positive of crypto. But as you say, using it for oligarchs to get money out of the country, especially when relative to gold, it's a relatively small asset class still. Gold just can withstand huge flows. Russia's been stockpiling gold for years, in a way that they wouldn't be able to do in crypto. So,
Ben, what's your strategy for navigating this uncertainty in terms of portfolio management?
Yeah. So as I said, our models were pretty early in taking risk off the table. We've just started opportunistically taking risk again. Our models were being very tactical in this environment. So, a couple of weeks ago, we had a quick risk on, risk off trade. Actually, this week, we're starting to tiptoe back into the market. Structurally, when we look, the price action is weak. It is largely exogenous driven, as you guys mentioned, with kind of war in Ukraine. A lot of the Fed action or the Fed expectations have already been priced in. And structurally, we're seeing a lot of bigger wallets coming and buying at this level. We're starting to see institutional capital buying at this level. We're starting to see more wallets become holders rather than transactors. So between kind of 34, which is the hard support, and 40, this is generally when we see buying come out of the woodwork, but it's not something you want to go all in on. It's something that we're starting to tiptoe back in on.
Potentially a buying opportunity. Ben, thanks for your analysis. That was IDX Digital Assets CIO Ben McMillan. Coming up, are Ukrainians using crypto as a store of value? We'll ask crypto investment app OSOM next. The Ukrainian hryvnia is experiencing some volatility, jumping 30% after falling to its lowest levels since February of 2015, when fighting between Ukraine and Russian-backed separatist fighters in the country's east weighed on the currency, according to Reuters. Joining us now is Anton Altement, founder and CEO of OSOM, a crypto investment app. Hello there, Anton. Thank you for joining us. So Ukrainians are fleeing from war. Crypto trading volume with the hryvnia pairs up. Are you seeing an uptick in Ukrainians using crypto to store value?
Hi, thanks for having me. So I think we have seen some activity now from Ukraine coming up. Obviously, last week, I think everyone was just trying to figure out what's going on and what it all means for everyone. But I think now we are seeing our users sort of being more coming into crypto more. I think some of them probably have escaped the country and have taken whatever the cash they had. So now it's kind of finding its way into crypto. So I think we're getting to a place where people are now starting to take care of their wealth, and crypto is absolutely one place where it's going. And for us, mind you, we have about between a quarter and a third of a user base from that part of the world: Ukraine, Russia, Belarus. And I think overall across the board there is a spike in interest. Also from Russia, there's a meaningful interest because a lot of the people also feel like the curtain's closing in on them. So overall, I think the interest is certainly going up.
Hi, good morning, Anton, or good afternoon, Anton. We, obviously I do want to ask you about some of the KYC and AML things that you're doing to keep certain people from not buying crypto. But nonetheless, this is also fairly personal in the sense that my understanding is you have a lot of your technical people are in Ukraine, correct?
Well, that plus I'm half Ukrainian, so my mother's family is currently in Ukraine, albeit in the western part. So for myself, yeah, that it's as personal as it can get.
Yeah, have you reached out to not just your family, of course, but also to any of the employees and any of the contractors that you have in Ukraine? Any sense of how things are going for them?
Definitely, we've been in touch with them, and what we also, well, the day that the conflict broke out, we offered to move all of them in Estonia, and majority of them have decided to stay, and some of them also took their commitments on pause because they actually went out to fight. And so a lot of the the developers we used to work with, a lot of designers we used to work with are currently, as far as we know, somewhere in the streets of Kiev wearing camouflage. So there's definitely, we've seen that sort of impact, which is for us was something that we didn't expect to happen. And so very few people actually took us up on the offer of hosting them in Estonia at least for the time being.
You mentioned that a lot of your user base, of course, is in Ukraine, Russia, Belarus, etc. How are you cracking down, if you will, on people who should not be using your service?
So listen, we are regulated in Estonia, and the regulator in Estonia has been quite clear in terms of their guidance. So we are applying extended diligence measures. We're just adding some more scrutiny into the source of funds. But I think by and large, when you look at our user base, I think these are not your oligarchs necessarily, because that whole part of the world has a lot of IT developers, a lot of the kind of professionals, businessmen who have made their money in a perfectly legitimate ways, and they just want to hold on to them because that's their life savings. And if they lose them, then things are going to get really tough. I'll do a lot of the work which they've done in the past. So from our perspective, we're just trying to remain calm, follow the regulatory guidance, doing what we should in terms of diligence. But at least in Europe, there has not been any sign of applying any blanket bans to any group, to any jurisdictions in that part of the world. And so until the regulator asks us to do that, we don't necessarily see the need to do it.
It's an interesting issue, as you mentioned, and just previously we were showing images of the humanitarian crisis as well as the Russian invasion in Ukraine. And you have several developers, as you mentioned, in the country. Ukraine is the fourth in terms of crypto adoption in the world, so a lot of development and talent in the country. And now it seems, needlessly they have to fight in this war. But I wonder, is that what you find that developers are having to do, or are they still working and trying to keep up the infrastructure of the crypto world?
I think it's a mixed bag. I really think there's a bunch of them that are actually out there sort of fighting, and they've parked their day jobs because I think the sentiment is very strong in the country about that being everyone's duty to defend the country. So our experience is that there's probably out of the people we work with, probably more than half actually have kind of put their duties, put their work on pause and are out there in the field. And sort of less than half is working. Obviously, twice as hard to make up for those who have to be kind of out there. So no, certainly, I think that the whole situation is certainly feeding through every part of the Ukrainian society. And I think there's very few. Well, there's just putting your head in the sand and ignoring it is not an option in Ukraine. And so we don't see people trying to do that. I think it's phenomenal the amount of the emotion and the commitment to the country the Ukrainians are showing.
In the meantime, I see that OSOM Finance has announced that you'll be waiving all fees on deposits, withdrawals, and exchange fees for Ukrainian users who are existing and new on the OSOM DeFi Earn platform. So I guess everyone doing what they can to help out. Anton, thank you for joining us, and good luck with your company, your family, your friends, and your colleagues. I hope there's peace for Ukraine. That was OSOM CEO.
Thank you very much.
Anton Altement. Right, time now to check in with Crypto Twitter for our tweet of the day. And this one from Anonymous. They've declared a cyber war against Putin's Russia. Their latest accomplishment? Hacking into the Russian streaming services, Wink and Evie, which is like a Netflix apparently, and live TV channels, Russia 24, Channel 1, Moscow 24, to broadcast war footage from Ukraine. That happening last night. So very interesting developments. That's it for First Mover. Thank you, Lawrence Lewitton. I'm your host, Christine Lee. We'll do it all over again tomorrow. Also check out The Hash at noon and All About Bitcoin at 3 o'clock Eastern. You're watching Coindesk TV. Also next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
With ordinary people in Ukraine suffering as the Russian invasion continues, we find out how the blockchain world is coming together to help. Welcome to the Daily Forecast, March 7th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, the conflict in Ukraine has entered a second week now, and efforts to support people in the country by the blockchain community are growing by the day. Today, we speak with the founder of Web3 company Everstake on his very personal role in the launch of the Aid for Ukraine DAO. That plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Before we catch up on the latest on Ukraine, let's kick off with a look at China's two sessions meetings. They are the country's most important annual political meetings where authorities lay out China's economic and social plans for the year ahead. And for the first time ever, the metaverse is up for discussion, with regulation being the watchword. According to local media, one delegate said that with more investment to nurture talent and support technological development, China can take a leading position in the field. Kong Feilong also said issues related to data security, information protection, and speculation that emerge should be properly regulated. While Zhang Ying, a member of the Chinese People's Political Consultative Conference, or CPPCC, said the sector is still chasing key technology developments and focuses too heavily on entertainment experiences. She also highlighted that regulation is needed for the healthy development of the industry, saying serious speculation is going on at the moment. Another CPPCC member said regulation is needed to prevent systemic risks. So, all in all, it sounds like caution is the name of the game when it comes to the metaverse for China. Meanwhile, Russia is facing ever tighter financial sanctions following its invasion of Ukraine. After saying sanctions would be imposed early last week, the Monetary Authority of Singapore has now provided more details. Financial institutions have been advised to freeze assets and funds for 4 major Russian banks, and digital payment token service providers are prohibited from facilitating any transactions that could aid circumvention of the measures. And for further clarification, in the age of crypto, this also includes cryptocurrencies and payment and settlement transactions that relate to digital assets, such as NFTs. Meanwhile, Russia's central bank has taken unprecedented measures, including doubling interest rates, to stabilize the economy and the ruble in the wake of the mounting sanctions. You can find those stories and more at forecast.news. So are digital securities coming of age? The announcement just recently that the New York Stock Exchange's parent company, Intercontinental Exchange, taking a stake in the tokenized securities platform T0, could certainly indicate that. If so, was that coming of age long overdue? Who better to ask about tokenizing the world than Henry Chung, CEO of Fusang. Fusang aims to reshape investment markets with blockchain technology. And it's great to have you with us, Henry.
Always great to be here, Angie, and exciting to see the developments in the tokenized security space.
I bet you've been waiting. Well, actually, no, you don't wait around. I mean, you're actively in the space, but it is really interesting to see that finally the growth in the tokenized security market is really developing. And more importantly, the question for you is, are there enough players out there to support that development, and where will they come from?
We certainly haven't been waiting, but it's nice validation almost to see that there's an increasing focus on tokenized securities. As I've always said, as interesting as crypto and NFTs are, there is still much to be done in terms of tokenizing real-world assets, shares, bonds, funds, real estate, really everything else you see in the world. And seeing a major player like the New York Stock Exchange and their parent company entering the market, I think is really proof that this is imminently about to happen. And really my message when you talk about issuers and intermediaries would be that all of us, Fusang included, we need to adapt and innovate, or we're going to be left behind, because this is what customers want. Both issuers, they want to be able to tokenize their securities, and investors are keen to be able to actually invest in securities, tokens that represent real-world assets.
I do want to ask you about the role of legacy intermediaries like investment banks. I mean, they still play an important role. Are they ready for the adoption of digital securities? When you take a look at the landscape, are they ready to play?
My belief has always been that the jobs to be done in the financial industry, they're not about to change. You're still going to need exchanges and custodians and investment banks and brokers. It's just that all of them better be able to adopt new technology. And I think there'll be a lot less intermediaries, that we can start to combine all of these functions using the power of blockchain technology. And so, again, financial institutions aren't going away, but if you are a legacy financial institution, as you say, that can't quite adopt a new technology, I really do think it'll be left behind, especially because there are plenty of firms today who are scaling at light speed.
I know we've often talked enough about this for me to know that you already envision a day where buying shares has become as simple as online shopping, but what does this mean for the future of capital markets?
You know, I'm convinced this isn't just a vision, that it's an inevitability, because the reality is we're used to a certain customer workflow with everything we do, whether it's buying things online through e-commerce or really buying or interacting with any company or firm today. We expect to be able to do it digitally, online, and directly with the company. We're used to being able to view information about a company's product. Maybe we go on social media, see some reviews about it, and then if we want to actually transact, we want to be able to do that directly and online. And this works for literally every industry in the world. And I think capital markets will be no exception. And capital markets need to start focusing on, hey, what are the customer needs? Am I really delivering my customers what they really want? Investors want access to the most exciting investments. Issuers, companies, not only want to be able to fundraise, but they want investors who are actually aligned with their company. They want to be able to turn their stakeholders into shareholders. And the platforms who can help people do that, I think, will win in this new market.
Henry Chung of Fusang, always a pleasure. And finally, as the conflict in Ukraine rages on, nearly 6,000 miles away, unable to return home, and feeling helpless as his family and friends battle for their lives and country, one Ukrainian is putting his computer engineering skills to good use, teaming up with partners in the blockchain industry to launch the Aid for Ukraine DAO. Here is Sergey Vasilchuk, the CEO and founder of Everstake, a Web3 company, in his own words.
Your parents, your friends, your employees, like people that you like talk to, they just film it on their phone or everything and just send it to the groups, and you see like in real time what's happening. So like after the like few days, like I was thinking like, yeah, I can't like just do nothing. I need to do something. And like what human can do is just something that like he was doing for years before. So like I'm running the crypto company for many years, so I can do just few things like fly the airplane and build crypto projects. So like flying the airplane is not enough. Crypto is something that could like help. So that's why like I just ask my partners, ask like all blockchain that we are validating to help us. So Everstake, probably one of the biggest validated companies currently in the world. validating the 50 plus blockchains, and all those guys, it's just not they're technically competitors, but in this situation, everyone was calling me and saying hey, how can I help? This Solana is our one of the partners, and I identified the core team of Solana as my friends. So Anton Altement is also has the Ukrainian roots. He born in the Ukraine. He already American, but he was born and grown in Odessa. So he feels some maybe magnetism with the Ukraine, people from the Ukraine. So he's very much, and he was the first who was shaking me hey, guy, don't start, let's do something. Crypto is obviously the primary source of finance. So I call banking legacy crypto, legacy finance. And for me, it's nothing unusual happens. It's just the proper tool which was used in the proper situation to solve the most efficient problem to solve. So, and really should understand me right now, I don't care how it will develop in the near future. Until we're in war, until we I don't care. It's just the tool that help me to resist why I'm here in the United States and cannot come back to Ukraine. So it's the tool to help my country to resist. Oh, sorry. Yeah, we'll see.
The crypto community coming together, truly powerful words from Sergey Vasilchuk, CEO and founder of Ukraine-based Everstake. Well, that's a daily forecast from our vantage point right here in Asia for today. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.